Well, good morning, everyone. Glad to see everybody here all bright-eyed. I am Darrell Cates. I'm a farmer from Illinois. I farm about 11 miles south of St. Louis, and I raise soybeans, corn, wheat, and I'm fortunate enough to be able to double crop my wheat into beans. I am a director on the American Soybean Association, and I serve on the Commodity Classic Committee that puts this convention together. I'm excited to introduce the early riser session this morning. Bull or bear, this is more than an 8-second ride, and I thank Farm Progress, Farm Futures Channel for sponsoring it. Before we get started, a few quick notes for everybody. This session is being video recorded. It will be posted to the Commodity Classic website in a few weeks if you want to re-watch it. We've got a handheld microphone available for questions. If you've got a question, please wait for someone to bring the mic to you before asking your question. This session has been approved for CEU credits for the Certified Crop Advisor program. If you would like credits for this session, be sure to sign up on the sheet in the back of the room. And lastly, please fill out the evaluations being handed out and return them at the end of the session. We read each and every one comments and really take it into consideration when we are selecting the educational sessions for next year. And now, let me turn it over to this session's moderator.
Thank you, Darrell. We are delighted to be back here today with all of you. We're less delighted with the markets. Anybody in here happy with the markets? But the reason that we do this every year, the reason that Ed's been doing it every year, and Ted is our new guy for this year, but he's been doing it for a long time too, other places, is that we've got to make money off these markets. We've got to find a way to do it, and these are the men who can help tell you how to do that. I was thinking a long time ago when we wrote the title for this, we said more than an 8-second ride. I was thinking that we could have just said it's a wild ride, or it's a, don't get bucked off kind of a ride. And that's what the message here today is. There are things you can do. I know it's popular for farmers to say we're price takers, not price makers, but you do have opportunity to find that margin wherever it might be, however you might need to work the market to do it. So this morning we'll have Ed Usset will be the first speaker. He's from the University of Minnesota. I'm sorry?
Ted's first.
Oh, Ted, sorry.
No worries.
We went back. We switched up. Ted Seifried is with Zaner Ag Hedge. He is the Chief Market Strategist, and he's going to speak to you about supply and demand and the fundamentals and all of the things that are going on with the market right now. And then Ed Usset from the University of Minnesota, author of Grain Marketing is Simple, It's Just Not Easy.
That's right. Is
going to speak to you about different strategies you can use in the market. Part of it is what you want to do. Part of it is, what your personality is. Personally, I'm risk averse. Some folks are going to just dive in and do it. And he's going to tell you which of those work most often, and so which can work for you on your farm. The fun thing about what we're doing here with markets is the responses we get from you guys later when you say, I learned something that allowed me to make money on my farm that I might not have. So that's your takeaway for today. How can you make money on your farm with something you learned here that you might not have otherwise? And so we'll start off this morning with Ted, and enjoy the ride.
All right. Well, thank you, Pam. As she said, my name is Ted Seifried. I am the Chief Market Strategist for Zaner Ag Hedge, and Pam's absolutely right with the 8-second ride. It's more than that. It has been wild for quite some time. So the topics of this discussion that we're going to have today First of all, I was on a trip to Brazil earlier this month just to see what exactly they've got going on down there. I have some insights from that. Also want to talk about the fresh 26, 27 corn and soybean outlook numbers that we just saw from the World Ag Board, or from the USDA's Ag Outlook Forum. Also want to talk about possible demand and price developments for 26, 27. And then finally, China, with great opportunity comes great risk. The idea of this discussion that I'm going to give to you guys right now is to kind of set up Ed for his sort of marketing and strategy. I am going to touch on a little bit of strategy at the end, but for the most part, what I'm trying to do here is kind of cover the market fundamentals that we're dealing with now and what we're looking forward to here in the future. So, starting with Brazil, we all hear about Brazil, we talk about Brazil in the markets all the time. But then going to Brazil and seeing things with your own eyes is sort of an eye-opening experience. There are a lot of soybeans in Brazil. I mean, a lot of soybeans in Brazil. And we were there at the time of, soybean harvest. They were getting into harvest, and they are not, well, you think of Brazil and you think of kind of a third world country. No, I mean, from an agricultural standpoint, they are very technologically advanced. All of these fields of soybeans that are getting harvested right now, they've got 10 combines in the field going all at the same time. And they got corn planters or cotton planters right behind it. They know what they're doing. They are very advanced, and it is just soybeans as far as the eye could see. And then we also visited the port of Santos, which is the largest port that they have in Brazil. They have now built out that northern arc port system. So that's taking some of the business from the port of Santos. However, the port of Santos yearly tonnage has increased by 94% in the last 15 years. That really speaks to the massive increase that Brazil has seen from their soybean production standpoint. They've really gotten aggressive on increasing that soybean production because they have a friend in China. They know that China wants to really work with them as much as possible, so they're trying to fill that need as much as they can. And they keep producing more and more and more and more. Now, at some point, they might run into an issue with that if China's demand starts to slow down at some point. But for now, they are the #1 soybean exporter in the world. And they took that title from us 5 or 6 years ago. There are no signs of them slowing down. So, Brazil, it's an interesting place. It's a scary place. I mean, it's not scary from I don't know, I didn't feel unsafe there. I just, look out at all the soybeans that we're seeing and wow, it's a big deal. Now, let's talk about corn. Let's talk about the corn balance sheet that the USDA just gave us. This is the Ag Outlook Forum. This is not even quite to a WASDE or World Agricultural Supply and Demand Estimates report yet. This is just their first sort of blush, their first shot, early numbers that we see. The acreage numbers that we're looking at here. These are not survey driven, they are just statistically driven. These will change a lot by the time we get to the first USDA WASDE report, because then we'll have the planted acreage report, which is a survey, or prospective plantings report, which is a survey. So again, a lot of these numbers are going to change, but some takeaways here. For one, they are looking for a pretty significant decline in corn acres after the 98.8 million acres that we saw in planted acreage in corn last year. They are looking for a very robust yield at 183. That's their trend line yield. That's what they're going to be using for this year. That's actually a bushel higher than the number that they showed us back in November. And I think it's a reflection of how strong our yields were last year, despite some of the difficulties that we had at the end of the year. So 183 is their starting point for yield. Either way, production's dropping by almost 1.3 billion bushels because of that lower acreage number. For feed and residual and exports, they have both of those numbers dropping by 200 million bushels. That's more a reflection of the lower production number than it is strength of demand. I think we can all agree that corn demand has been really very strong in the past couple marketing years, this one in particular. But that lower production number is going to give us potentially lower demand. And they're leaving ethanol unchanged. And I think that's a great sign saying that, that ethanol demand is just going to be there. So the bottom line is they're looking for ending stocks to decline a little bit to a 1.837 billion bushel carryover. That is a little bit more friendly than the 2.127 billion bushel carryover that they have for this current marketing year. Part of it is exports. Exports been the main driver. That's the thing that we all want to talk about here for this year. It is the bright spot in the corn balance sheet. Every week we see export sales and export shipments are just really, really good. And they've been happening at a time where it is not our normal export window for corn. Generally speaking, we are hot and heavy on soybean exports from September into March or into the end of February. But we've been exporting at a very elevated level for corn. That speaks to corn demand. Also might speak to lack of soybean demand that we had during that time frame. But we are off to the races on our corn export program. And now, as we get into our typical export window for corn, the question has been for months is it going to continue to run at this hot level? Well, if you look at the last 3 weeks, we're seeing that seasonal ramp up, at least to start this export window season. So that's really good looking. It looks a lot better than what we did last year. And for next year, as I said, showed on the previous slide, the USDA is looking for a number right in between the 24-25 and the 25-26 numbers. I think that's rather attainable as long as prices stay reasonable for global importers. Now, is China going to come in to buy US corn? Right? I mean, the whole thing of China has been beans. They've not really bought corn from us for a few years now. But you look at what's going on in China. The first chart, that's their domestic corn prices. They've really kind of been spiking since October. Our prices have stayed pretty much the same. We are very competitive on the global market. They've been buying a whole lot of sorghum, a lot from the US. So if China either needs corn, they might look to us, but specifically before the meeting that Trump and Xi have at the end of next month, if they want to throw an olive branch, it could actually be in corn rather than soybeans. That seems to be where the need is, and it would really kind of soothe that domestic market that they have. So look out for that. It's a possibility. I'm not saying that, don't take that for a given, but I'd say that is a pretty strong possibility. Now, we're going to come back to Brazil for a second. Brazil, they're massive exporters of soybeans. They prefer soybeans. That's their ideal crop, right? Corn is something of an afterthought for them. They plant it for their second season. I almost look at it as a cover crop. And they plant shorter day varieties, so their yield doesn't have quite as much upside potential as ours does on any given year. They're also using a whole lot more corn domestically. There's ethanol plants going up everywhere in Brazil, corn-based ethanol plants going up everywhere in Brazil. Traditionally, it's been sugarcane-based ethanol plants in Brazil. Now they're moving to the corn model because they've got a lot of corn in-house. So their demand for corn has risen 800 million bushels, basically since 2016. That is great because it's keeping bushels off of that export market, and it's allowing us or giving us that outlook of us being the #1 corn exporter in the world going forward, right? The outlook for corn, US corn versus Brazilian corn, I think is a whole lot brighter than the outlook of US beans versus Brazilian beans. Now, the big thing that we're going to be looking at this year is acreage. Last year, acreage is what really messed us up when it comes to a balance sheet. Because we saw an unprecedented spike in that planted acreage from the June survey. It's a survey. The USDA asked almost 70,000 farmers, hey, what did you guys plant this year, right? And historically, that number has always been within 1% of the June number. The final number has always been within 1% of the June number to the upside. Now, we have had years where we have bigger misses to the downside. Look at 2019, for example. We all know what happened in 2019. We just couldn't get that crop planted. That can happen. Weather can have an effect to the downside. But really, we've never seen anything more than 1% or even at 1% to the upside. So all these acres came from somewhere. This will be something that we're talking about for years to come. It'll be something that we study for years to come. And it really casts a bit of a dark cloud on these surveys that we're going to get, the prospective planting and the planted acreage surveys. Do we really trust them? Are we going to see a repeat of last year? I'd really hope not, because it makes it really hard for us when we're trying to make marketing decisions when all of a sudden we get an extra, almost 5 million acres. Wow. So hopefully that's not the case. Now, soybeans. Again, this is Ag Outlook Forum numbers. This is just a really early glance, but you can see how they have less corn acres. They're shifting a lot of that into soybeans. Soybean planted acreage, they're looking for 85 million acres. It's a pretty decent rebound from the 81.2 million that we saw last year. For a national average yield, they're talking 53 bushel per acre. That matches last year's record yield. So they're looking for a very strong yield again for soybeans. Also, it kind of says that last year could have been better. I think if I'm reading between the lines here from the Ag Outlook Forum, they feel like last year, if we had gotten a little bit more rain in August, could have been an 54 or 54 or 54 and a half. Maybe, but either way, they're looking for a trend line yield of 53. So obviously with that extra acreage, that gives us more production for next year. That 4.45 billion bushel production compared to the 4.62 that we saw last year. The good news is that on the demand side of the equation, they have crush increasing, albeit not as much as it has in the last couple of years, not from a percentage basis. The last couple of years has been 5 to 8% increase in crush year over year. This is only about a 3% increase in crush year over year. So it's a good amount of bushels, but from a percentage standpoint, they see our crush capacity increase being a little bit less than what we've been in the last couple of years. And part of that might be because we are seeing soybean oil stocks build pretty significantly. Crush margins aren't quite as strong as they had been. Maybe they just don't see crushers being as aggressive for next year. They do have exports increasing pretty significantly though, and that I think is a reflection of the current policy in place, which is that verbally agreed upon, apparently, trade deal that we have with China that came from the Apex meeting in South Korea last end of October, beginning in November, for China to buy that 12 million metric tons for this current marketing year. They've said they're considering, or we've said they're considering another 8 million metric tons. So far, we've not seen real strong evidence of that they're actually buying. But they also said 25 million metric tons for the next 3 years. Well, you have to assume that this export number going from a 1.575 to a 1.7 billion bushel does include that 25 million metric tons. So if that doesn't happen, if we don't see that increase in exports, that leaves this carryover number of a 355 million bushel carry pretty vulnerable, right? Because they've already said that they don't see the crush increasing all that dramatically. So if you cut 200 million bushels off that export number, that's going to go almost directly to the ending stocks number. Again, this is a very early number. The production numbers in particular, I think we all have to take these with a grain of salt. We'll see how this lands, but it's really stressing that we need to get that 25 million metric tons from China for this next marketing year. Again, 355 million bushel carryover is virtually identical to what we're talking about this year. So stocks to usage is going to be pretty identical. They are talking about a small bump in the average farm price, but really small. So basically the USDA is seeing a very similar year next year to what we're dealing with in this current marketing year, albeit with a little bit more production and a little bit more demand. Here's the example on crush, right? We're kind of back to where we were in 23-24, at least that's what the USDA is projecting. This 3% increase in our crush capacity or our crush demand year over year is a bit smaller. It's not as aggressive a trajectory as what we had been seeing the previous 2 years at that 7% increase and that 5% increase. I'm hoping that there's some upside potential here, but for whatever reason, the USDA is just not seeing that right now. And then there's China, right? That's the 1,000-pound gorilla in the room. That's what's really making our markets so volatile. I mean, we have 30-cent moves based on social media posts about China. And so what does that mean going forward? What are we looking at China going forward? And the thing that I think isn't getting enough attention is that the Chinese economy is not what it was back in 2006 when it was hot and heavy, and we saw their soybean demand increasing dramatically every year because their population had money to spend. They were spending money on their favorite protein of choice, which is pork. Pork is fed by soybean meal. They need those soybeans to crush to feed the pork to feed their population. But as their GDP declines, and it's been declining since 2006, and it got kind of wonky there during COVID, as everything did, right? Since then, though, it's on a decline, and that trajectory is for further declines. Part of that's because of trade war, right? So if Chinese economy continues to decline, does that slow their global demand? And does that do it in a climate where you have Brazil continuing to push the envelope to produce more and more soybeans? right? So this is a concern that we have to have when we talk about our export business and our export business with China. On top of all the other concerns that we have with China, they might be having internal concerns. The demand just might not be there, or the growth in demand just might not be what it has been in the years past. And then we look at funds, right? The funds have taken the soybean market on a fairly wild ride going back to really the end of September into October of last year. They had been trending very sideways, undecided, not really knowing which way to try to play the soybean market since early part of the growing season. And even with the dryness that we had in August, they didn't really get excited about that. What they got excited about was a potential meeting of President Trump and Chinese President Xi in South Korea at that APEC summit at the end of October into the beginning of November. They started buying soybeans very aggressively. We had a government shutdown at the time, so we didn't actually know what they were doing. We weren't getting these reports. The trade estimates were guessing that the funds had bought about 100,000 contracts, less than what they actually did at the time. But they got very excited about the possibility of resuming that Chinese business. We put our highs in November, shortly after that meeting occurred and that deal was announced. Then what happened? China started buying, and the funds started selling. In trading, we have a theory, or have a saying. I don't love stuff like this, but we have a saying: buy the rumor, sell the fact. That's exactly what the funds did. I think it came from the realization that 12 million metric tons is not enough to get us to the current USDA's export number. So they were like, okay, great, it happened. We got a deal. We pushed up a little bit more after that, but then they sold off. But then a few weeks ago, while I was in Brazil, by the way, this was fun to deal with while sitting on a tour bus, but we got another tweet from Trump considering that additional 8 million metric tons. And up we go again, the funds buying again, based on, buy the rumor. The question is, are they going to sell the fact? Whether China buys that 8 million metric tons or not, at some point we will have factored the possibility into the market. And when the reality comes or doesn't come, that might be a fairly bearish thing. They might want to get out. So this recent rally that we've had back towards these November highs in soybeans might be a real opportunity for us as producers. Now let's talk about corn, right? Because that's really what we want to talk about. This corn chart, the funds have not gotten excited about anything in corn for quite some time, right? They've been short corn really since May. We had a growing season. Even with all the rust talk that we had at the end of last year, even with the dry August and September, that did not get the funds excited. The funds got mildly excited by the soybean rally that we were having October into November. It got them flat. But then since then, they had been kind of selling into the corn market again. Not dramatically, but to a relatively significant amount, especially when you see what's happened in soybeans. Now they've been kind of slowly buying that position back. I think part of that might be the kind of idea creeping into the market that maybe China might want to buy some U.S. corn. Either way, we're kind of creeping back to flat. Now, why do I talk about the fund position so much? Because we just saw on a soybean chart, they can have a very dramatic impact on our markets. And what this means for me, when you look at where we were in 24-25 last year, and 23-24, 24-25, the last few years, they've been pretty long going into January, February. They're not this year. What did we do the last couple of years? We put our highs in January and February. Part of that was because the funds were really long in the market at the time. We are not putting our highs in right now. So I think we're set up for a much more seasonal corn market this year. We have weather risks. We have weather risk in that second season safrinate corn crop in Brazil. Talk of La Nina going to El Nino, that could cause some problems there. They're harvesting kind of late, which means they'll be planting corn kind of late, which pushes them further into the danger zone of their weather. We have our growing season, our planting season, our growing season. That all brings risk for the market for corn. And you saw that USDA balance sheet, it's already got a declining carryover from one year to the next. That could put a bigger emphasis on weather concerns here for this year. So I don't think there's a weather premium in the corn market right now. I think there's a potential to build that weather premium into corn, at least going into June or July, till we know. So I like the setup for corn this year. I think there's upside potential for corn. There's a lot of really good things happening for corn. The one Not so great thing is that we just grew a 17 billion bushel crop and we got to move through some of that demand. That's what we're doing right now. So all that being said, let's talk strategy. And because I just talked about the corn, we'll start with that. And I'm gonna do this because I know you guys like it. I'm putting the corn hat on. Yes. As I said, I'm pretty bullish corn right now. So the corn strategy that I really like at this moment is a reownership strategy. Reowning bushels that we've sold from old crop, but also maybe getting in front of sales that we might be making for new crop here pretty soon. So what I'm doing with that, I'm buying the July corn 460 call, selling the 520 call. I'm paying about 11 cents plus fees. It gives me a 60-cent window. If corn rallies, I get to recapture that 60 cents minus the 11 and change that I paid for it. 460 is not that far away from that July corn market. It's trading above, last I checked, it's trading above 440, almost 450. So really, you're only about 10 cents out of the money. It wouldn't take a whole lot of a corn rally to get this strategy maxed out. By the way, I don't see corn really trading much over 520 unless there's an absolute weather disaster, but this is kind of picking sort of where I see the top of the market. I like this strategy a lot. I'm kind of bullish corn from the levels that we're at. Now, soybeans, a little bit of a different story, right? We talked about the rally soybeans have had that corn hasn't enjoyed, right? Soybeans just recently, since the start of the year, have had about a $1 rally. I think this is a pricing opportunity for producers. Now, sure, it could be that we have a weather issue during our growing season, but we've already moved past the South American weather problems. So I think soybeans, now is the time to be looking at protecting the downside. And the way I'm liking to do that right now is a synthetic put strategy. Either selling cash or selling futures. I'm using July at 1163.5, just that's where it was when I made the presentation. And then buying a 1220 call at 19 cents to kind of protect myself. And if we do have a soybean rally for whatever reason, maybe China comes in and buys more than 8 million metric tons that they're considering. Okay, I want to get back into the upside at some point. But for right now, I want to be short July futures at the price they're at basically right now. So just very quickly, that's the strategy. If you guys want to talk more strategy, I'm around all week. Love to talk to you about it. Hunt me down. We got a booth 3391, I believe. So thank you. That concludes my portion of the presentation. The first QR code up there, that's my afternoon commentary. It's 5 to 7 minutes recapping the grain markets. I try to do it every day during the markets. That second one is our new Chief Market Analyst, Karen Braun's market newsletter. It's fantastic. It's the best thing I've ever seen. I might be slightly biased, but really, really, she is the best in the industry across the board. All the charts that you just saw, made by Karen, really fantastic. And then finally, I'm part of the profit planning series that Channel puts on. It's a weekly update. I give Ted's 3 keys to the market for the week, and we have some weather stuff in there as well. It's a really helpful tool for you guys as well. So once again, thank you. Now I turn it over to Ed. Sorry if I went over a little on time.
That's okay. Thank you.
Should I leave the corn hat on or no?
I'm not going to wear it.
All right. My head's hot. It's warm up here. I think I should wear it.
Yeah.
Sorry, buddy. Go.
Keep it close. You never know.
Yes.
Good morning. And I want to thank Channel and Farm Progress for inviting me back again. I did a little research on my own work at Commodity Classic. This is my 15th consecutive Commodity Classic. And of all the venues we've been to, I know many of you have been to a lot of different venues. My favorite one is right here, San Antonio, Texas. It's wonderful. So I was at an Outlook meeting last August of university types looking at the grain and the livestock markets. And the running joke among the analysts is you never talk about what you said last time because we're all so damn wrong. Okay, so just don't remind people. But I'd like to revisit a year ago in Denver because I laid out some thoughts on the market and they were wrong. So let's talk about it. The question I had is, would new crop prices rally this spring? Now, I'm taking you back a year ago. December 25 corn futures were about a dime lower than they are today. November 25 soybean futures were almost $1 lower than where they are today. And I came up with all these numbers and showed that, in fact, we very rarely make highs in January or February. That was my whole point. You don't make highs in February. And in fact, I was channeling the late, great Soy Roy Smith from Nebraska, who used to talk about the John Deere low coming in February because people had equipment payments to make and they would sell grain and the market would go lower. That was my thought. I'm thinking, don't get ahead of yourselves. We were on a little bit of a rally. And I'm like, it's February, people, take it easy. So let's take a look at a little history there. You know that the crop insurance base price is being set right now. It is the February average. And I asked the question this year, how often, we've been doing this 25 years, how often is that base price we set in February the highest opportunity you have in the months ahead? Well, let's start with the corn, and to date, the December corn has averaged about $4.60 a bushel. So I'm going to look at the last 25 years, and here's the first 8 years. You can see that in all 8 years, we found an opportunity in the next 6 months to price corn, new crop corn, at something better than that crop insurance base every year. Now, you're not impressed with the numbers. You say, well, that's 20 or 30 cents. This was the era of $2 corn, people. 20 or 30 cents was a big deal back then. Now let's look at the next decade. We always had a chance. We always had a chance. So I'm coming to you a year ago with great confidence. We're going to have another opportunity. And of course, there's 2020 and 2025. That was it. I was talking to you, and the high had already happened in terms of a new crop opportunity. Let's look at soybeans. I came to you with a very similar message. Don't get ahead of yourself here, people. I know we've had a nice little rally, but I think we could do better in the spring. I still think we'll do better in the spring, but we've got an opportunity here right now. I did the same analysis on the new crop November contract. Now our base price is being set as we talk. It's been averaging about $11 a bushel so far in the month of February. In fact, a little bit higher. We might end up a nickel higher than that by the time this year is done. Here's the last 25 years. Last year was a dud. It was a real dud. So I'm looking at the opportunities we have today, and I'm kind of forgetting, I'm pushing my seasonals aside. Do I think prices will be higher this spring? The odds are yes, yes. I think we'll have a better opportunity in the spring. But that doesn't mean we should shut our eyes to what we see today, okay? So let me talk about new crop pricing. I'm looking ahead now, people. I'm not talking about the crop in the bin. We'll get to that. Hank Holder's coming up. Hang on, okay? I'm talking about the crop coming ahead, 2026. I will tell you that I'm not particularly excited. December corn is trading at about $4.65 a bushel, $4.65. That's not a great price. The opportunity a year ago got a little bit better than that, maybe a dime or 15 cents. But I have to remind you that each of the last 2 years, the December 24 contract and last year's December 25 contract, both of those contracts found a way below $4 a bushel. So here we are today at $4.65. I'm not particularly thrilled about it, but I think you ought to think hard about getting something done. Soybeans. We're at $11.20, $11.25 a bushel on November soybeans. That's 45 to 50 cents better than your best shot all of last year before harvest. 1080 was about as good as it got. And here we are at 11.20, 11.25 on the new crop contract. People, I think you got to do something. And by the way, if you make a sale, you know, hope to hell you're wrong. Okay, hope you're wrong. We had a wonderful rally in November, particularly in soybeans. And I was talking about it in November. I'm in western North Dakota. And talking to producers, geez, we're up $1.25 cash prices on soybeans. I hope you're looking at that. People, you gotta tell me to shut up. As soon as I start talking about things, they go right back down. But today, we're back to where we were in mid-November. Cash price, new crop opportunity. And back in November, I had a producer come up to me and say, you know, I priced some, he's feeling dumb. He said, like, you know, I'm probably wrong, but I priced some new crop corn and soybeans yesterday on that November bulge. And I said, I hope you're wrong. I hope you're wrong. He said, why do you want me to be wrong? I said, did you sell the whole crop? Oh, no, you know, I priced a quarter of it. Well, you better hope to hell you're wrong. So 3/4 of the crop is at a higher price, right? It drives me nuts. Producers tell me, I priced some new crop grain and the market's down. I'm feeling good. I said, did you sell it all? No, I only sold 10%. I said, you're getting killed. You always want higher prices. But I look at that November contract today at 11.20, 11.25. Do I think we could see even a better opportunity in the months ahead? Yes. Do I think you should take advantage of something today? Yeah. And the wheat market, no, I don't like wheat. I mean, I think we have opportunity on the upside. Ted didn't talk about wheat because nobody talks about wheat anymore.
Boo.
There's been a lot of bad news from my home state of Minnesota over the last 2 months, so I thought I'd diverge into skiing just for a moment, because there is good news in Minnesota. We had snow. And just 6 days ago, I skied the Birkebeiner, and the weekend before that, I skied the Ely Nordic Lopet. Ely, Minnesota is right near the Canadian border in northern Minnesota. I've been going up there for years. I have to tell you about the Ely Lopet. I took first and dead last. No kidding. I was the only one in my category out of 150 skiers. So I took first, but I came in dead last. And when I came in, 150 people came out of the chalet. They had already started the award ceremony. They came out to cheer me on, and damn, was that embarrassing. Look, 8-year-old kid, oh, look, Mommy, that old man's coming in. Look at him. Nordic skiing is good. You should try it sometime. Let's talk about old crop for a moment. I'm talking about the stuff that many of you have stored in your bins on the farm. And I will reintroduce you to a couple of my characters. Hank Holder and May Sellers, these are two producers doing the exact same thing. That is, they put their unpriced bushels into storage on the farm, and they hold on to it. By the way, all my data is based on Iowa average prices, and I've got like 36 years of data here. My database just keeps growing every year. They're paying the same variable storage costs, interest on their money, shrink on their grain. The only difference between them is May Sellers sells her grain, her corn and soybeans, at the end of May. Don't get hung up on the end of May. It could be May, June, somewhere in that spring period, good time to do it. Hank Holder is the perennial bull. He hangs on to it right until a week before harvest when he sells it. And I know what some of you are thinking, geez, no one holds their grain till a week before harvest. Oh, bullshit. Hank is breaking the 11th commandment of grain marketing. Thou shalt not hold unpriced corn or soybeans in the bin beyond July 1. Now, how can I put a bright line on one day of the calendar, July 1? Well, it's right there in the price patterns for cash prices. This is Iowa corn prices, a 25-year average. And you can see that May Sellers is making her sale At the high point of the year, on average, Hank is making his sale close to the low point of the year on average. Now this is average, and the funny thing about average, no year is average. No year looks this way. They all look a little different, and yet I've gone back to 1950 studying these cash price patterns. This is driven by the production cycle. And while every year is different, I challenge any of you, give me 10 consecutive years of your choice, 1965 to 1974, 1998 to 2007. Give me a 10-year period of your choice. I'll take the data, I'll make a pretty chart, and it'll look like this. Every 10 years. And you're saying to yourself, who the hell has time to go back to 1950 to look at these numbers? I work at a university, I got time. Let's compare May and Hank. This is 36 years of actual data. May is beating Hank by 48 cents a bushel. Beating Hank 3 out of 4 years. Years with a margin greater than 10%. And what I'm talking about here is, Ted and I are neighboring farms, and he's got me by a nickel this year, and I got him by a dime next year. Did we learn anything? But if Ted's beating me by 30 cents or more on $3 corn, 40 cents or more on $4 corn, 50 cents on $5 corn, that's a big difference. And May is beating Hank by more than 10% in 23 of the 36 years. In fact, the interesting thing here is that in 3/4 of the years, somebody's getting the hell beat out of them. Unfortunately for Hank, the odds are 5-1 in May's favor. I put together a nice graphic for you. The upper half of this graph, those are Hank's good years. The red and the pink down low, that's when Hank's losing. Hank has lost out by more than 10% to May 5 years in a row. Hank is due to win.
Yep.
Hank is due to win. But it's a funny thing. Odds are a funny thing. If I flip a coin 10 times in a row and I get 10 heads in a row, what are the odds of me flipping heads this time? 50-50. Same odds apply. I don't care about the last 5 years. So just keep that in mind. If you've got old crop, my message is pretty simple. If you've got old crop, you're looking at today's bulge. Ted has indicated he's friendly to corn prices. I don't disagree with that at all. But I'm going to make some phone calls in mid-July, okay? Cell phone. They'll give me numbers. And if I call you, you better step into the bin, and I want to hear an echo. Soybeans, similar format, 36 years of data. This is not a typo. May is beating Hank by $1 a bushel. 21-3 on those big years. Here it is graphically. Do you want to be Hank or May? And by the way, some of you are saying, well, I don't hold it all the way to harvest. I only hold it to, into August. Okay, you only got half the hurt, 50 cents a bushel. By the way, I've had conversations with producers about this. I think the issue is so overwhelming. I remember a conversation with, I'm doing a marketing program in mid-July in southern Minnesota some years ago. And I'm talking to producers, and I tell them about Hank. I've been talking about Hank a long time. And of course, 80% of the producers there are sinners. They all got corn in the bin. And why? Why? And I ask, why do you still have corn in the bin? It's late July, and the patterns there are well established. And he says, well, when you have dairy, you've got to have corn in the bin for dairy. I said, oh, you're in a different business. I said, how many cows do you have? He says, well, actually, Grandpa sold them in 1986. And then I go to the next table, and the guy says, well, you know, why do you have corn in the bin? He says, oh, you know, when you're running cattle, you got to feed the cattle. And I said, oh, but you're in a different business. How many cattle do you run? He says, oh, well, actually, Dad got out of that a decade ago. Think about it, people. I think there are Hank holders in the audience, and you're doing it just because Dad and Grandpa did it. But it was a different operation then. If your operation has changed, you can change too. It's not a sin to have an empty bin. Just a few other thoughts on soybeans, corn, and wheat. 3 years ago, I came before this esteemed group. I showed you this pretty map and told you that I was aware of 17 major soybean crushing facilities coming into play over the next 4 years. This is an update on that. 12 of those 17 plants are up and running. Now, some of them were brand new plants. Some of them are massive expansions to existing plants. 3 more are coming on board this year. A couple of them I just haven't been able to figure out where they are, and only one plant, a Cargill plant in the middle of the country, has been paused. We've had a big increase in soybean crush capacity, driven, of course, by the anticipated demand for renewable diesel. And that's a policy thing. That's what's driving that. But just a little perspective on that. I read these, the NOPA, the National Oilseed Processors Association, they come out with their numbers for the crush every month. And I have noticed over the last 6 months that the crush numbers are exceeding the market expectations pretty much every month, not every month, but many of them, sometimes by 10 million bushels or more. So I did a little math in my head, and you can do it with me. If we were to exceed market expectations by 10 million bushels a month, crush, for 12 months, that's 120 million bushels. That's 10% of what we sold China a few years ago. Renewable diesel, the trend is good. It's wonderful. It's not going to replace our export market quickly. Just perspective, people. We got a long way to go before we do that. Who did we sell more bushels to last year? Soybeans to China or corn to Mexico?
For Mexico.
We sold over 1 billion bushels of corn to Mexico last year. That's a big market. You know what 1 billion bushels is? You know a 100-car unit train? You ever had the glorious waiting at a station while it's going by? That's 8 100-car unit trains crossing the border every day, 365 days a year. And finally, I have to talk about wheat. Someone said nothing's happening in wheat. There's a lot happening in wheat, but it's not good. From a domestic consumption side, in the last 25 years, our US population is up 22%. The food use of wheat is up 2%. There's some publicity about the new, the food, what they call the food pyramid. They've turned it upside down. The trend towards protein has been going on for several decades here, people, and this explains a lot about why the wheat market is suffering. I teach 2 courses at the University of Minnesota. They are available remotely. If any of you ever wanted, if you want to take this course, you can. If you have kids, sons, grandsons, grandchildren who are interested, I have people taking it from all over the country now. And just let me know if you are interested. And as I always do, you've got before you an evaluation form. I like to encourage that. Ted's our newbie here. Give him hell. Give him hell. But these are real comments from my students in recent years. The best class and instructor I've had in 4 years. try not to hurt myself patting myself on the back. Ed is a nice professor, but he gets off topic a lot. I tell them about the skiing too.
Yeah.
And finally, you need to dumb things down. I'm a guy who uses cartoon characters to illustrate the simplest of points. And I got a 20-year-old wants me to dumb it down.
Maybe you should try a corn hat.
Anyway, there you are. Please fill it out. Thank you again for your time. And by the way, today I've got books with me, and we are up on this exposition is a couple of different levels. Way up on top, there's 50 to 80 exhibitors. We're up there at booth 5121 from 2:30 to 3 today. I'll sign books and sell them. And tomorrow, also from 2 to 3 tomorrow. Thank you for your time.
I used to say that Ed was the only funny market analyst I know, but now we got two. So since Ed admitted to being wrong last year, I can admit to forgetting a couple things this morning. One, I am Pam Caraway. I am the editor of Farm Futures Magazine, the business magazine for Farm Progress Company. And Ted and Ed are here because Channel sponsors us in our long-running sponsorship, and Ed's the one who can tell us how long and where we've been and what we've done and which restaurant we went to and which hotel we stayed at, because he's been here the length of the time. Ted is new with us. He is a great addition to this program. We are forever thankful to Channel and Bear for sponsoring this program that helps all of you learn about marketing. And now we have just a few minutes to ask some questions. Does anybody have a question? There you go. Jeff's going down.
I got a question on your corn option strategy.
Yes, sir.
At what point would you want to, or would you put in a stop to get out of that long position on the call, or what would you do?
Yeah, so what I like to do on something like that is, as soon as I get filled, I don't mind putting in an order to take roughly 80% of it, right? So I'd have it at like 44 cents. It has a maximum of 60 cents. If we're above 520 at expiration, so the third Friday of June. But if we get there sooner than that, I don't mind having that order resting at 44. Now, if it looks like we're rallying into June and it might run over my 44, I know I tell you guys not to pull your cash orders. I might reconsider that. The art is in the management, right? So you're constantly kind of updating your thoughts on things like that. But I would have something setting at 44 cents. I'm paying 11. I'd have something waiting to take that 44-cent profit. And look, anytime I can add, in a climate like this, 33 cents to the bushels that I've sold, man, that's giving me a big leg up on the rest of the guys around me.
Eric?
Yeah, what about old crop corn basis? Where do you think that's headed?
We just got past harvest, right? So like, really every year this is kind of the worst that it's been, but it wasn't as bad as what we were thinking on a 17 billion bushel crop. Part of that's because we've had such strong export demand. The river's been great. So I don't know, I think there's a good chance that we see a recovery in basis. The problem that I have with that is that a recovery in basis and a recovery in prices don't generally go together. So I think we'll start to see a recovery in basis before we see a corn rally. That might be the early indicator of that. But then you might have flat price outpace gains in basis. So do be prepared for that. I don't know, generally speaking, pricing basis, you kind of want to wait a couple more months.
We got one last question.
Is there any hope for wheat? And why does our wheat export, we're the last resort?
Because we're far from the market.
And currency. Yeah, so we are far from where a lot of the markets is for wheat, but then our currency is a disadvantage for us. Most other global wheat sellers have a currency advantage on us. And also, you're going to maybe add in politics there too. You know, there's a lot of countries that buy a lot of wheat that don't really like doing business with us if they can help it. So there's all that. Now, is there hope for the wheat market? We've had a really nice rally off the lows in wheat, and that's been mostly driven by funds covering their long-time short position. The funds have been short since like 2022, and they're now starting to cover that. That's a lot of it's based on geopolitical tensions and concern. Look, if you give funds a reason to doubt themselves, they'll run for the doors, they'll go flat. But that might be the most optimistic we can be on wheat right now, because this is one of those rare years in wheat where we haven't seen a production issue in any of the major wheat exporters in the world. So basically, we'll have to look for next year for some sort of production issue. But at least for now, you've got funds covering shorts, and that's given us a bit of an opportunity. At least we're well off the lows.
All right, last question. Last question.
With the 10-year projection of price they just put out of 420 or 450, whatever that was, based on weather, who knows, but how far is too far to price corn out in the future if it looks profitable?
Well, at today's levels, I wouldn't be looking out, 2 or 3 years out. I wouldn't be doing that. There's too much can happen between now and 2, 3 years out. If you see some incredible price, and we have had times in the last 20 years where you could look 2, 3 years out and see just a number that said, boy, they could take fertilizer a lot higher, they could take fuel a lot higher, and I could still make money. You can consider it. But boy, you've got to get a premium. When you're going 2 and 3 years out, you got to have more than 25-cent premium, okay? You need a bigger pad than that.
I don't mind being 15 to 25% sold in soybeans in November 27. I really don't like the soybean outlook. I think we're going to continue to have issues with China. I think we are in a longer-term realization of loss of that export business and a transition into having to use more domestically. And as Ed pointed out, we've seen an expansion in crush. We're really bullish about the idea of SAF and using soybean oil for sustainable aviation. But in the meantime, it takes time, right? And so we've seen soybean oil stocks grow to 1.9 billion pounds. That's the largest we've had in a little while. So we're not using it immediately. Crush might slow down at a time we need it to grow. So I do like looking out at soybeans much further out. And I don't mind corn at like 5 to 15%, when I look at DEES 27. The problem with that is that if we have extra soybeans to go around, well, that puts pressure on corn acres and corn prices to some extent. So yeah, soybeans, I am really looking at that. Corn only to a small margin.
Thank you all for being here. We appreciate every year that you come and support us and listen to our fine market analysts speak. I want to remind you about Ed signing books. He had a line last year for signing the books, yeah. And I can understand it. So I recommend the book. It's in its ninth
all money goes to the University of Minnesota, by the way, not to me. And I only take cash, and I
don't think he's
and you just say, yeah, you take cash and you gets the money. Hey, I made a commitment years ago that I would never steal small. Okay? That the university will get the money.
The university does get the money. You guys got the benefit of these folks here from Farm Futures and Farm Progress, from Channel and from Bear. Thank you very much, and thank you, Ted and Ed.